Godrej Industries, Bharat already has in his portfolio and he wants to add some more at current market price. Does it make sense for him to go ahead with this sort of a strategy, or should he wait for some correction?
This has already happened for Godrej Industries from 600-ish levels just about a couple of weeks back. The stock has come back to 550 levels, so it's a good 10% correction. In Godrej Industries is a stock which is also very moderate beta to low beta kind of stock, so it's not something that the stock moves up into very vicious kind of an uptrends. But whenever the uptrend begins for Godrej Industries, we've seen that the uptrends are more sturdy and more strong in nature. So I think in that aspect, this could be a good opportunity where you can look to maybe average out further and look to buy back. The stock has already corrected some 8-10% from its recent swing high. So I would advise an average at current levels and a hold on Godrej Industries from a medium to long term as well.
Okay, there is a mea culpa that we have to talk about. So, Kunal, when you spoke about the small finance banks, we pulled up the wrong chart while you were speaking. So I request you to very quickly take us through, I believe it was Ujjivan Small Finance Bank, and I'll ask my team to pull it up on screen while you talk about it.
Yeah, Alex, it was a charge for small finance banks discussion, and I believe that the stock looks very, very attractive. In fact, the volumes in the last 1 week have been exceptional for many of these small finance banks. So the markets probably would have got a whiff of something which could be coming into this space, and we've seen the prices reciprocating the volumes, giving a breakout today. So what I was indicating earlier was a bigger move ensuing into many of these names because it's been backed by strong volumes as well. So I would expect at least another 10 to 15% upside for many of these small finance banks over the very near term.
All right, the next viewer query, we'll go on to that one, and this one is coming in from Jayant Rumala, saying that he wants to know why are the share prices of BPCL and HPCL are falling. Kunal, what's your take on this one? What are the charts indicating?
I think HPCL started to fall off last week. I remember there was this single day cut off almost 6-7% for HPCL, and then a follow through price action. Difficult to say the reasons why the stock has been falling. It could be multiple, something which could be maybe attached towards crude oil prices as well. But I think purely on the charts, this the OMC sector has not been a stronger performing sector as such over the near to medium term. These stocks have a tendency of going through very slow, gradual, steady uptrends, but they are very susceptible towards a lot of events and news flow. BPCL being one of the prime candidates, the stock has been in the thick of news flow since quite some time. So I think it's difficult to try and trade these stocks when they are going into stronger degree of momentum. So the best way to try and trade these stocks is let the stocks go through a corrective phase. A 10 to 15% correction ideally should be taken as a good opportunity if you're in from a slightly short to medium term view.
Okay, I just want to point out to Siko, who's asked a question on a very, very tiny stock, Alu Fluoride. I believe it's only BSE listed. Unfortunately, Kunal doesn't have a view. I'm going to take another question. This one, sorry to keep you waiting, Gaurang, but this one is a question on the piped gas theme. Nivin is asking whether you think that it is something that is interesting to play. Or what do you think about that sector?
So Alex, our sense is, and as a disclosure, we have been positive on the gas theme for at least about 2-3 years back, and the stocks that we have under our fundamental long-term coverage are Mahanagar Gas Limited, that is MGL, IGL, Gujarat Gas, Petronet LNG, and GSPL, that is Gujarat State Petronet Limited. So over the last couple of years, the consumption has gone up considerably, and with the focus of the government to improve the availability of clean and green fuel for vehicles, they have started investing in pan-India infrastructure of gas pipeline distribution. We saw one of them commencing from Cochin to Mangalore, if I'm not mistaken. And our sense is that moment you have the infrastructure in place, the scarcity of availability of CNG and LPG when you move out of city, boundaries and you hit the highway, the availability as of now is not there. So I think once this infrastructure is in place, you will have that problem getting sorted out. I think consumption is also going to look much more stronger. So we remain extremely positive on MGL, IGL, Gujarat Gas, Mahanagar Gas and Gujarat State Petroleum Limited.
Okay, this query is coming in from Mr. Balan saying that he has 500 shares of Federal Bank and of Bank of India. He's making above 7 to 10% profit on his holding. He wants to know whether he should continue to hold on to these both of these counters as Federal Bank or Bank of India, and accumulate some more, or should he look to switch to other private sector banks for the medium to longer term. What's your take on this, Gaurang? What should Mr. Balan do? Does it make sense to stay put with Federal Bank and Bank of India and continue to accumulate, or should he look at some other private sector banks?
So Federal Bank, I'm not worried about his investment. In fact, we have a buy call on Federal Bank with targets of 120, 125. These are long-term targets, Sharon. Bank of India is something that I'm worried about, and as a disclosure, we have a sell call on Bank of India. And it's good that he's profits. So take your money off the table. If you want to look at public sector banks, then State Bank of India would be the preferred destination. Otherwise, you can definitely look at smaller private sector banks. And as a disclosure, as a stock recommendation, we have identified City Union Bank as an investment idea with targets of somewhere close to about 200. So my sense is that he can book profits in Bank of India and move into a smaller private sector bank like City Union Bank, or else he can look at larger players like Axis, HDFC Bank or ICICI Bank.
Okay, what's the view? So this is a stock that I think Gaurang got spoken about a lot in the recent past because of the size of IPOs that are coming up. And a lot of people are wondering what is the biggest IPO that we've seen, and Coal India stands out, right? So Mr. K. Sundareswaran was asking about Coal India. He's got 400 shares bought at levels of 148 and he would like to hold it for the long term. What according to you should the target be?
Well, it was one of the biggest IPO, and it's the company with the largest reserves of coal. And unfortunately, the performance since listing, Alex, has been quite disappointing. In fact, for all those investors who got the shares in IPO, I don't think their money has gone anywhere. In fact, they might have kind of eroded a little bit of wealth. Having said that, we have a buy call on Coal India, but the targets are very close to where the stock is trading at. I think the stock is trading at about 147, 150 levels. And if I'm not mistaken and my memory serves me right, the targets that we have set aside is about 165, 170. One thing is that good dividend payout because of government company, etc., PSU company. But that's not the only reason why you invest in the stock. You invest in the stock so that your investment in the stock, gradually gains momentum and gives you a decent return. So maybe on rallies, you can possibly book out of Coal India, since we have a target of 160, 170 odd. And as a preferred alternative investment idea, my sense is that you can possibly look at something like Ashok Leyland or even Tata Power or even BEL. If you are wanting to look at government PSUs, then even BEL would be identified as a better investment idea.
This comes from Pragya, wants to know about HFCL. What sort of a target price should one look at for the shorter term? Kunal, what's your take coming in on HFCL? How are the charts looking? What sort of a target should Pragya look like if one wants to invest or has already invested in?
Very tricky kind of a stock, frankly, Cheryl. It has a tendency of going into very strong uptrends in the later part of a bull market, on the equity side as well. But somehow the stock seems to fizzle out, and it goes through very sharp periods of volatility as well. So it's difficult to anticipate that the reason behind the rally for stocks like HFCL. I think if I'm not wrong, the stock currently as well is into the trade to trade segment as well. So that could be one of the key reasons why the volatility for or the volumes for the stock would also drop down significantly. The only concern with stocks like HFCL is that what has happened is because of the last 3 months, 4 months of a successive price uptrend, the indicators have got back into an extremely overbought territories with RSI levels more than 80, 85 on the monthly chart. So that's not a good sign, because typically at these kind of levels is where you either see froth building up or you see a chance of a much sharper corrections which could come into these names. So I would suggest an avoid on HFCL, at least looking at the technical parameters on the monthly chart specifically.
All right, Sagar's got an interesting question. He's already holding, Gaurang, a couple of housing finance companies, and he's got HDFC as well as Aavas, and he's wondering if he should add, or he's planning to add another into his portfolio, and he's wondering which one to add. What, according to you, stands out as a third option that he could consider?
Before I comment or recommend some of the HFC stocks, I think it is prudent on my part, first of all, to advise him that don't overexpose yourself to any particular sector or stock, because that also leads to underperformance in your portfolio in case if your portfolio is tilted towards a particular sector or stock. So just be aware about this. Having said that, I think the great change that we are witnessing in the real estate sector, benefit of that will also be reflected upon housing finance companies, that is HFCs, and with lower interest rates and better prices as far as residential properties are concerned, Alex, and along with that even commercial properties, I think the attraction is even more. Loan book growth for housing finance companies is likely to grow multifolds going forward from here on, and along with that, Alex, you have lower interest rates. So we have HDFC, LIC Housing Finance, which is a candidate of an IPO in the near future, and Canfin Homes. Along with that, we have Repco Home Finance also under our coverage. But like I said, Alex, as a prudent long-term investment idea, you should always bear in mind that you should not overexpose yourself to a particular sector or a stock.
Okay, and this query is coming in from Divya. She wants to know the view on Tourism Finance Corporation for India. She wants to purchase at current levels. Kunal, how is this particular counter looking like? Does it make sense for Divya to go ahead and buy at current levels in Tourism Finance Corporation, TFCI?
So yeah, TFCI looks attractive. Short-term charts are indicating a breakout. I think if I'm not wrong, stock is placed at 80-81 levels, and the previous breakout levels for the stock was around 75 or 76 and a half. So I think the stock has just recently given a breakout. A very steady chart as such. The volatility is a bit amiss into this name, but that adds up with the stock being more stable in terms of the near-term breakout trend. So looks attractive, and I think if you're looking at it from a short-term view, I would recommend a buy with a near-term target closer to 88, 89 on TFCI, and stop loss you can keep it closer to that 75 mark, which is the breakout point.
Okay, the cement counters have actually been very active of late, but that's just from what I can see on the charts, they've been very active. I think Swayam is asking for a fundamental view on Ambuja Cements. He's holding 200 shares at levels of 278, and he's looking at it for the long term. So he's wondering, Gaurang, should he book partial profits and enter again down the line, or should he continue to hold and keep adding?
So Alex, a lot of people ask me this question, that should we book profits and enter again? But the big question mark is, will you have the ability to buy the stock in case if the stock has to go up? And in most of the cases, clients investors lose out on their investment by trying to venture into selling it at higher level and buying it at lower level. So my humble advice is that please don't try to do that. Be focused on investments if you are a long-term investor, and continue to hold the stock instead of getting into this rut of selling and buying and selling. I don't think you can do that in case if you're not a professional trader. Having said that, we as a brokerage house, Alex, are extremely positive on both commodity plays, that is cement as well as metals. And just now we spoke about housing finance companies, and I also referred to real estate sector. And for those who don't know about this, real estate sector is the second largest consumer of cement that is manufactured or produced in India. And along with that, you have huge push from the government for Bharat Nirman in terms of construction of infrastructure, improving and modernizing the existing one. And you have the capex slowly picking up from the private sector. So, and it's a known fact, Alex, that without metals and you can't really create an infrastructure, especially a durable one. So we remain positive on Gujarat Ambuja, Ambuja Cement, ACC, Ultratech, Grasim amongst the large cap names. Shree Cement, Dalmia Bharat, Ramco Cement and JK Lakshmi Cement are the mid cap ideas from a long term point of view.
This query is coming in from Nishot, and this is on MRF. He wants to know whether it's a good buy for the longer term at current levels. What's your take, Gaurang, on MRF? Does it make sense for someone to buy at current levels for the longer term?
Well, it makes absolute sense, Cheryl. And I remember we had coverage on MRFs from levels of 10,000 or 15,000. And I think that is a per piece. That is the cost of a single share. As of date, if I'm not mistaken, the stock is trading at about 80,000 for one share. It's a known pedigree company, one of the largest and the oldest player amongst the tire manufacturing sector. And we all know, without a quality tire in the vehicle is not at all stable or safe enough to travel in. And along with that, this player MRF is the largest player in India, and along with that, it has got one of the best and the strongest export markets as well. I think you should do an SIP in this. Start at current levels and go on adding to it whenever you get corrections in the market or in the stock price of MRF.
Okay, Affle India is the next stock we're talking about. Soumitra is asking about it at current market price. Kunal, on the charts, the last month or so has seen it drop a bit, has seen a bit of selling pressure come in. What do you see at the current juncture? Do you think that it's past that crucible?
Well, I think so, Alex. I think the major part of the correction seems to have happened for Affle, and I think the current levels where the stock is placed, technically, I think it's looking very, very attractive. It has those classical contrarian points to look at. So one of them being the prices back at the 200 moving average, which is a very strong indication that the mean reversion or the correction process seems to be now settling in. The second and the major factor which excites on the charts for Affle India is the fact that the stock is forming a bullish RSI divergence on the daily time frame. Now this is typically a feature on technical part which we look out for specifically when the stocks are going through a bottom formation process. So I think on both these aspects, on the indicator fronts as well as on the price fronts, I believe that these could be good levels, attractive levels to buy the stock, specifically if you have a longer term view of years or more for Affle India, because I think these kind of corrections are the ones which you should be taking opportunity of from a longer term view.
So there's a tricky question coming in from Indumati, and this one is for you, Kunal. She's asking, when will the mid cap and the small cap IT stocks go through a reasonable correction so that a fresh investor can actually look to enter that particular space? What's your view on that, Kunal? When can one actually expect to see some sort of a correction come in the mid and the small cap IT names to actually go and nibble in?
To say when will the stocks correct, but this is what typically happens, that when you miss out on a stock, we tend to have a fixation towards a certain level towards the stock prices, and the stock prices go slightly beyond the expected prices is where we just wait and hope for corrections. But in stocks where you see classical trending natures, there is hardly any period of major corrections which you happen to see by, and if the corrections also happen along the way, it would be marred with so much of news flow and events that it's going to be difficult to participate. Your buying level keeps on dropping lower and lower as now we actually go through a corrective phase in individual stocks. So I think rather than looking at in the manner in which that when would the stocks correct, I would suggest that have a staggered approach of buying. These stocks have a tendency of going through those routine corrections of 5, 7, 10% odd, or sometimes a time-wise correction. So if you can diversify your portfolio well from the IT pack, then I believe it makes a good sense for you to hold on to it from a longer-term view. I've been advocating a couple of stocks on the large-cap IT stocks, like something like Wipro and Infosys at current levels. I think both these stocks, they look attractive to me on charts, and any kind of dips, which you see on these names should be taken as good buying opportunities from a longer-term view.
Gaurang, I think Bikash has got a very fair question. What would you consider long term? Is it 5 to 7 years or is it something else? From the bond perspective, beyond 1 year is considered long. And from the personal finance perspective, at least for equities, you would say upwards of 5 years is long. So what would you consider long? And the second question I will ask you is from the sugar sector. Pragya is asking about Sri Renuka Sugars. Would you consider that this is the best bet or would you pick another one?
Well, so answering the first question, I think anything with 1.5, 2 year plus time horizon could very comfortably be considered as long term. But the longer the time horizon, the better the return, Alex. And that is what history has proven as far as investment into equity market is concerned. And with that, I would also want to give a caveat that that investment should be done with the proper understanding and a little bit of due diligence on your part, and with principles of investment in equity markets absolutely clear in your mind. If you do that, I don't think, at least on whatever experience I have, if you do this, then I don't think equity markets will disappoint you in terms of achieving your objectives and goals. As far as sugar sector is concerned, well, I think the entire sector is fired up because of the great ethanol story that surrounds sugar manufacturing companies, and over the last, we've seen significant increase in terms of per liter of ethanol prices. Blending of ethanol is also increased to a higher level by government, about 15 to 20%. But what remains to be seen, Alex, is how capable are the oil marketing companies with their infrastructure of blending amount of ethanol with petrol and diesel. Having said that, Sri Renuka Sugar, if I recollect right, they had taken over a company which turned out to be an absolute disaster. And from those levels, the stock went down after that, and then the recovery that we covered at Geojit was Balrampur Chini. But let me say this, that Balrampur Chini has actually overshot our target about 15-20%. So I will not have any advice in terms of buying into any of the sugar stock at current level. Maybe Kunal would be in a better position to answer this.
This query is coming from Rajat. Before that, Kunal, would you want to take that query from Gaurang, where he's saying that would you be able to advise on Sri Renukas?
I would advise not to look at the stock, frankly, at current levels. I think it's far more better and prudent to try and look at the large cap peers or the peers, or better peers from the sector. So something like Dhampur Sugar, Balrampur Chini is what I would advise at current levels.
All right, and this query is coming in from Rajat. He's saying that he wants the views on HCC. He's already bought about 1,500 shares at 10.5 rupees per share. He's saying, does it make sense to go ahead and book profit considering the HCC's performance in the quarter gone by, or should he continue to hold on to this counter? Kunal, what's your view? Is it prudent to actually stay put in HCC? Should Rajat go ahead and book profits?
So I would advise to book profits over here. It's a very high beta stock, and it's been a big underperformer. So yes, from the March 2020 lows, the stock is now at 14 rupees or 15 rupees approximately. But then when you look at it relatively over the last 5-7 years, the stock has been a big drag. So typically when you see such kind of names rallying up, you're making, I think, 35-40% on your investments. So I would advise a book profit on this stock. And I would advise that you switch to some other sector as well. So I think something on the metal side or the metal stocks, etc., they look very attractive to me on the charts. And I believe something from the large cap names. So if you're looking at large cap stocks, maybe a Tata Steel, JSW Steel could probably look very attractive. But if you're looking at maybe the mid cap names from the steel sector, then I think something like Nalco as well as SAIL are the ones which look very attractive to me on the long-term prospects. So I think there's a much higher probability that you can make stronger returns into this sector. So I would advise to switch from HCC to the names which I just mentioned.
Kunal, I'm clubbing a couple of questions. Hopefully, you'll be able to give me a view. NMDC is the first one. Sapna has bought at levels of 180. She's holding 300 shares. She's asking if she should continue holding. And the second one is on Aarti Industries. Can it be bought at the current level is what Dikshita is asking.
So yes, for both of these stocks, NMDC as well as Aarti Industries, they look very attractive. In NMDC, I understand the stock is going through a bit of a correction from 190-95 levels, I think, if I'm not wrong. It's come back towards 168, but that typically happens almost on a regular basis for stocks like NMDC. But these are structural trends, which have changed for many of these metals and commodity related themes. So I believe NMDC should probably get back its trend on the upside and should fire up again. Same is the case with Aarti Industries as well. Stock looks attractive to me. It's been I would say a better performer over the last 14-15 months of the market rally from March 2020 lows. So I would recommend a buy and a hold on Aarti Industries as well.
All right, with that we come to the end of the queries segment. With time for high risk and low risk ideas from our viewers. And coming to you first, Gaurang, what are your high risk and low risk ideas for the viewers today?
Well, so first one I just referred to during the Q&A session, Cheryl, and that is City Union Bank, south-based bank with strong presence down south, but over the last couple of years they have been branching out pan-India. Good numbers for the last quarter that we have seen. They have been able to contain the gross and the net NPA level along with lower provisioning. Net interest income and margin is absolutely looking strong and is likely to go further. From current levels, we have set aside a target of somewhere close to about 200 on City Union Bank. And the next one on the battery stroke OEM segment, that is Exide Industries. Now, this particular company has got almost 60% market share when it comes to automotive stroke industrial batteries, and a much stronger presence as far as the two-wheeler segment is concerned, wherein it commands close to about 80% plus market share. And with the theme of evolution stroke migration from conventional fuel-driven vehicles to EV, that is electric vehicles, and in the recent past we have seen quite a few launches now. Both Amara Raja Battery and Exide Industries are forward-looking companies as far as their R&D is concerned, and they are also working on short charge and long-term theme battery, which will enable a larger, playing time or a driving time for end consumers. So Exide Industries is something that, and not only the new order market is strong, Cheryl, equally strong is the replacement market. So we have targets of 220 on Exide Industries.
Okay, that's a strong theme to look at. Let's go across to Kunal. Kunal, what are your high risk and low risk ideas for the viewers?
So I'll suggest a couple of buy calls and a mixed theme. First one is from the auto pack, and I would suggest a buy on Eicher Motors. Now, the stock has been into a consolidation, but it's forming a classic bullish flag pattern on the hourly time frame charts, and it's a huge kind of a flag pattern, almost a 300 to 400 pointer. If the flag pattern gives a breakout on the charts for Eicher Motors. So near-term wise, you could look at targets of 2850, but as I said, that this could be a bigger breakout, which could happen for Eicher Motors, provided the stock breaks out of this key resistance point around 2750, 2760 mark. Buy with a target of 2850, stop us at 2650 mark. And the second would be a buy on Tata Chemicals. Have been very bullish on this stock, since the last I think couple of weeks. Even though the stock has broken past about a major of its resistance around 725, 740. But I believe that at current levels of 780 approximately looks fairly attractive for yet one more round of a breakout on the upside. The previous major high for Tata Chemicals was around 800, 820-ish mark, and I believe that those levels could get tested in this wave of rally as well for the stock price. So would suggest a buy on Tata Chemicals 825 as a target and stop us at 750 mark.
All right. Thank you, Kunal, as well as Gaurang, for giving us your high-risk, low-risk ideas, as well as sharing your views on the Small Finance Bank and also taking the viewer queries. And on that note, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, lots more lined up for you after this break, so don't go anywhere.